Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 11th of August, 2020, about 6:10 p.m. Central Time. A bloodbath day in gold and silver. You know, markets that get the public all in and everybody wants to buy it and everybody is buying it, they're prone in the futures market when you have 90% leverage to get corrections. We hadn't had one like this in quite a while, and I know that I'm getting a lot of people that have called, written, Ira, please tonight, would you bring on a weekly chart and give us an idea instead of waiting for the weekend? So I did that. I did it in gold and silver, and you'll see that in a minute. Let's talk about what went on. We've had this phenomenal run-up, and we're getting a break in the metal markets. Is it a long-term change in the trend is what people want to know. On the daily chart, you don't break this much without saying, we've gotten a break there, what's it going to do? We'll cover that today too. We saw the dollar get a bid, the euro get offered, the stock market come down. Remember, this market got, and you'll see it in my video right after I record this one, I'll do the financial market, how close it got to the all-time highs. Energies have held on. We had a 9 million net draw, I believe, out of the API number. That's a powerful number for it. We'll see what all these want to do with that. Bonds and notes got down very hard today as interest rates climbed, and they had the first big reaction to the downside that they've had in a very long period of time. I'm quite happy with what I said on that, and I'm quite happy when I told you that I thought the first time you would hit in the VIX, the lower Bollinger Band, and we'll cover that in my other videos, that the pros would probably write some puts. I think they went home with pretty good profits. All right, let's take a look at the weekly chart. Here's what you did. Don't panic. That's number one. You had 3 weeks in a row over the upper Bollinger Band. I don't care if it's a daily chart or a weekly chart. You're overextended when you're over the Bollinger Band. And the theory of the band is the market's going to pull back to the right-hand side of that band. My own count, as I give it, that's what I call it, is that it's rare to get beyond 5. 3 is really pushing it, believe me. And you were up this week already in the early part higher. This is what you did. You're now under it. I think that's healthy. Not bearish. I think it's healthy. Now, admit it, momentum is turning down at this point, so the odds favor that the market could fall further. If the market wants to break super hard, it might be going back towards the 1787 to the 1800 level. The last break low was about 5 weeks ago at 1791.10. And no, I am not saying it has to go there. I'm saying it could go there. I like that it's getting under the Bollinger Band. Staying over it is just that pressure cooker. When you get the correction, it does just what this did. No surprise. That's my point of view on it. When we come to a weekly chart of gold, the market had got up, as you know, to 2010, and now you're off of that by $87. Okay, but does this look to you like the market is falling apart? I don't see it. The 18-week average will be no different than we have on this chart. They'll be the same number, and it is. Support's back in that level. That doesn't mean you have to go there. That's where the support comes in. When we look at a daily chart, this is how you looked coming into today. This is it. And this market, I know I kept saying, wow, it's unbelievable on this rally. Then you get a day like today, and this is what you're doing tonight. Okay, you haven't taken out the lows of yesterday. You could well challenge them to see what's under there. When you take a look at the swing lines, what you did today, and I want to make this clear, what you did here was the warning signal. That was Friday, August 7th. You had an outside day down. The key is not to take that out. If you don't, it's often what we'll call a trading top, and then the question is, what's underneath that top? That's what this market did. So let's put on the moving averages. The 18-day moving average held this market on the first break of the day. It held it well. You extended the break. Okay, so we're formally out of the uptrend. The swing line has now a higher high, lower low. The bias is down because you're under the 18-week average. The next support is down at the 100-week average, 1783.50, which isn't far on the daily average from the weekly average of 1787.50. That'd be a heck of a break, $140. Again, I'm not saying it has to go there. I'm saying those are support levels. The Bollinger Band is jumping up at 1842. What I'll stick my hat on is wherever that number comes in, if you go to it, that's where I would expect the people that are getting this route going, that's where I would expect they'll cover. Why? My theory, it doesn't mean I'm right, my theory is the first time you hit a Bollinger Band that you haven't hit in a long time, and you haven't hit the lower Bollinger Band since June, that is what pros build into their systems, I think. Do I know? I don't know. I certainly can't visit every professional in the world. I don't even know who they are. I can't tell you what every algo has. I can tell you what I think, and that's what I think. So on rallies, I'd look for resistance at the 1964.50 level, and the market has to restructure itself. The market could either throw out a new sell signal to get down here, or it can put itself on the daily charts and try to get back up to that 18-day average and fight around that number. That would not surprise me. The gold-silver ratio had been one-sided. I don't think you disagree. Totally one-sided, so we're getting a correction. Well, we've had these before. You get them through here, you get them through here. I don't think it's changed the whole posture of the silver-gold ratio. I can make an argument you get back to the 79 level, but I think longer term, if you're going to have a metal bull market, I think silver participates in it. And I think if there's a vaccine, silver gets another boost because industry will need it a lot. It's used in everything. I mean, let's face it. If you're in the tech world, things that run with electricity in the tech world, somewhere along the line, there's probably silver involved. When we look at the silver chart, let's go here and get a better picture. Here is a market that had 1, 2, 3 weeks in a row over the Bollinger Band. I know you might throw that out and just say, oh, that doesn't mean anything. I don't. I tell my clients and I teach them, you don't buy over a Bollinger Band. And you would say, and you rightly so, I think, Ira, you didn't buy it at 22, it went all the way to 29. You're right. How many of those you think you get in your lifetime that they make a move like that? While you're alive, could there be 15, 10 of them? If you're playing for those, you're probably wiped out in the futures market because they generally don't occur. What more or less occurs is hitting Bollinger Band tops and bottoms and bouncing from those and playing the high percentages. That does not mean that's not a good investment and the market went up. But understand, if it was good there, why are you nervous when the market's down $2.34 on the week? You shouldn't be. You should be saying to yourself, okay, so it's pulled in there. There's nothing wrong with that, and I'm in agreement. I see strong support at the 1900 level at $6 lower. Do I expect that to be hit? It could be. I don't know how far the route will go. Do I think that's a big number for traders? Yep. Do I think the pros would step in? Yep. Do I think that it's right now going to do anything? I think it's going to fight at that Bollinger Band. We'll see if it finishes the week under it or not. The same in the gold market. These markets have to prove themselves. Where did the daily silver go? Da-da! You tell me it didn't make its run at that 18-day average. This is what gold was doing up until about 11:30 this morning. I even wrote about that. I said, you know, it's really strange. Gold went right to what I call, in my newsletter, the line in the sand, and it's holding it. I don't know what that means, but it's interesting. It was a sign that even with the break, and even though you went through it, the market's paying attention to it. Well, silver's paying attention to it. I wouldn't be surprised if silver now, with these slow stochastics, if they break down under the 70 level, that this market starts finding the pros nibbling right there. Now, I had a client that I talked to late in the afternoon, and they said, what do I do with this? I said, you know, this is what those smaller contracts are made for. If you're fishing between here and the $20 level, and you don't want to look at the market and say, okay, I'm going to just look at the long-term trend, not this chart. I want to play with the weekly charts. Well, that's the way to do it with those types. You got to decide which route you're going, daily or weekly. They fight each other at times. We're in a correction mode. But right now, the pros, I think they're going to buy against that 18-day average until they're proven wrong. And to prove them wrong, you got to get all the way under this number. And that number on this chart is 2,300. So it's a heck of a risk. It's not that much of a risk when you're trading the smaller contracts. I'm not a trend anti-trend trader. But I see higher lows and I still see higher highs. The first thing I see is we're in a correction. I am not super aggressive when you have an overbought condition that is no longer embedded. I do this. I step back and I use my head. I am not here to tell you where to buy or sell. I will do that in my morning subscriber video to my paid subscribers. I'll let you hang. Not hang yourself, but hang on the word. In the copper market, we have a pattern of lower highs, lower lows. Now, you did very well. You've stayed within the Bollinger Bands. This market, I think, is trying to break away from the others and say, listen, I'm Dr. Copper. And as Dr. Copper, I'm not looking at gold and silver with the speculators in it that way. You tell me what the economies of the world are doing. And so far, all the economic data we're getting from today's PPI numbers and the like look good. A bad piece of news that set the stock market down and others is that the Democrats and Republicans are still not getting together on a relief package. And you hear the different Fed presidents coming out and saying, we need some fiscal policy. Stop with the politics. That is what's going on. Shame on Congress. People need the help right now, but it's all about who's going to win the vote, and that takes over the precedent of doing some of this. I'm not scolding. You have to understand what the stock market did. When it heard that, Mitch McConnell came out, and then Chuck Schumer came out, and the market heard that. You look what the stock markets did. You took all the air out of the market. The market was expecting better. In the platinum, well, you pulled back to the 18-day average, and that's where the market's trying to hold. Okay, I can live with that. It hasn't been trending. It's had a lower low and a higher high, and the momentum's been pointing down. Let the market restructure itself. The palladium market couldn't quite make it to the upper Bollinger Band. It looked pretty good up until today. I thought the market had a shot for it, to be honest with you. It failed on it. The key was not to take out this low. It did. So you're back in the middle of no man's land. Back into a trading band market caught between the lower Bollinger Band and the 100-week average and the upper band of 23, let's call it 2372 and round it. The 18-day average at 2212, let's round it there. That's where I think the battle is. Momentum is down. Bias is down, but you're not trending. So I'm going to look for good support if you get down into that level with another level of selling. In the dollar index, the dollar had lost its bearish embedded reading, not here on Friday, yesterday. And I was sitting there going, what's it going to do now? Because it might, generally when you lose an embedded reading, you go to the closest moving average. If it was bearish, it's the 18-day average. Seems to me it's still trying to set that up. We'll see what it does. Do I think the dollar is going to run away to the upside? Well, it's come down an awful lot. It can get a bounce for no reason at all. It is summer as well. You can get all those plays. We'll see. I'm right now not trending. What I have is a market with the higher lows. I have the lower high, but you can really argue with today an outside day up. You have a higher high and higher lows unless you take out today's low. Take out today's low and this is a failure on the long side. However, you're still under the 18-day average. Therefore, the bias is down. What the market is doing is it's working itself out of, current tense, working itself out of being oversold. That's how I'm reading the market. So you look at it all, you try to put two and two together and come up with ideas. And this is why that 5:40 in the morning subscriber video that I do on the futures is so important. The idea there is I'm going to tell you on a day like today what happened in Asia, Europe, as what happened in America goes around the globe, how the markets are looking, the big reports coming out, and throw the trade ideas there to you. They're not all going to be winners. In fact, I'll make you a promise. I have losers. I'll make you a promise. I have some winners too. The name of the game is trying to stay disciplined, understand the chart action, and trade it accordingly. Always know where you're wrong and don't be stubborn. The easiest loss is the first loss you take. The hardest loss is the one you become stubborn with and refuse to get out because the market's going to come back. Sure it is. As you can see, these are the markets we cover. I put a scroll bar on the bottom. The reason is you can scroll right through it and see what it is. I do the same in my Spider ETF subscriber video. Those traders can also, my Spider one today, I taught a lot about Bollinger Bands. It's 30 minutes long. So if you think I put 5 minutes in these, you're wrong. My videos are anywhere from 20 minutes on average to 30 minutes. So each one's long, in-depth, and what do? I give you the fundamentals, trade ideas, what I think in the market, why I'm thinking what I'm thinking, where I think the market is headed, so you can work with that one way or the other. And the whole idea here is what? To come up with a game plan. Game plans are everything. If you don't have a plan, you're pretty lost. So you get a day like today, as it was happening, you shouldn't be panicking. Now, okay, this is what I'm doing. I'm not right in this market. I want to get out. That's what you do. If you lose, you lose. The name of the game is to keep your capital together so you have another shot at it. The worst thing you can do is lose all your capital and keep funneling money into it. You want to be able to take money out, not keep funneling money in. That is the goal. Reaching it, you've got to work on that. How do you try? Well, this is another tool. It costs you about, for 30 days, the price of a large Starbucks. And there it is. It's out at 5:40 in the morning. I don't care the time zone you're in. I record it then. It's out right after 6 something, Chicago time. You've got it well before the action all picks up. Evening action, remember, it's lighter volume. You're going to get the reactions now from Asia and so on. Hope this helped everybody. I'm Ira Epstein. Hope you sign up. Just go to our website under the word research. That's where everything's at. Take care.